Saturday, August 28th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at the dollar index and gold and why I think the next move higher in gold and silver, for that matter, is going to be explosive. Historically, the dollar has traded inversely to the price of gold, but I'm going to show you why since 2008 that hasn't been the case. And in my opinion, it's a symptom and a signal that all fiat currencies are going to implode in value versus real money, versus gold and silver, versus commodities, tangible goods. Before I go into that, though, let's talk a little bit about what happened yesterday at Jackson Hole. Well, it wasn't at Jackson Hole. It was a virtual speech for the Jackson Hole Symposium. And I'll revert to the FT here, what they said. Their headline yesterday, it says, Powell sends strong signal Fed could dial back stimulus this year. Central bank chief declares clear progress on U.S. labor market in speech at Jackson Hole. I can tell with the FT you can't trust them. This headline is very misleading because it wasn't a strong signal. If it was a strong signal, we wouldn't have seen the stock market continue higher to make new all-time highs. We wouldn't have seen the 10-year drop. We wouldn't have seen the dollar drop. We wouldn't have seen gold and silver trade strongly to the upside. No, the market was very comfortable with what Powell said. The market is telling us that Powell is not going to rock the boat. He's going to keep stimulating. He's going to keep increasing the inflationary environment. He even said that we're very far away from a rate increase, and they could change the tapering stance very quickly. Something could come up and they could use any excuse. And do I trust the FT? No. And I've spoken about this many times. Some of you might not have seen this. This is an editorial that they did, that they wrote. The person who wrote it didn't even put his name on it. And it was from April 2004. And it's this here, going gold. So that's the kind of publication the FT is. They're trying to help out the central bankers. They hate gold. They told people that it was pointless holding gold bullion. They said the pointlessness of holding bullion continues to sink in. And the price of gold at the time was 400.65. I think it was around 220 pounds per ounce. Right now, we're over 1,300. They've done a great disservice to many savers with this editorial, I think. I was so outraged. Not outraged, but I was like, man, this is ridiculous. They didn't have the term back then, fake news. I was already in the gold market. I had started stacking in 2002, and I thought this was pretty outrageous. Their reason, of course, is that central banks are in control of everything and that you don't need gold. And they were wrong then, and they're wrong now about Powell. So that's my view on that. Tomorrow, of course, tomorrow night, London time, I'll be doing my usual live stream, and we are going to touch upon what's happening between Saudi Arabia and Russia, the agreement that they signed at a military expo. I think Prince bin Salman, he was there in Russia at a military exposition or expo, and he signed a military and security agreement with the Russians. and I think it's very significant in terms of what it means for the petrodollar. I'm going to cover that tomorrow on my live stream at 9 p.m. London, 4 p.m. Eastern Time. So you can ask me any question you want about the petrodollar, and I'll try to answer it as best as possible. So now let's go to the dollar index. And there's a lot of people, even in the alternative, but especially in the mainstream, who say that gold is not doing well because the dollar is strong. Yes, maybe in the short term that might work out. But I wanted to show you a couple of very long-term charts going back to 1971, which of course is a very important year. That's when Richard Nixon suspended the convertibility, fixed convertibility of the dollar into gold temporarily. For 50 years it's been so, of course. And ever since then, the dollar has been a fiat currency backed basically by force, which is part of what the petrodollar is, and also backed by faith and confidence that people have in the dollar. Of course, before that, the dollar was as good as gold, and I think that faith and confidence is getting very thin, and that's why it's important that the powers that be keep the gold price under control, keep people out of buying physical gold, right? But the charts don't lie. Yes, there is manipulation, but if you look at a line chart, which is interesting because it's just the closing prices, and these are monthly charts and they're logarithmic, so it's a percentage change chart. And the dollar index was devised back in 1973. And why was that? Well, because prior to 1973, all the major fiat currencies, and prior to 1971, they were fixed against each other because they measured value and they were just a measure or a weight, right? And it's like, it makes sense that things are fixed. Some people would argue, oh, it's not a free market, but an inch is fixed, a weight, a pound or a kilo is fixed, height is fixed, feet or meters, speed is fixed. If we kept changing speeds and other measures, the world would be a crazy place. And is it any wonder that our financial and monetary world are crazy places? No. But what I wanted to show you is that, yes, historically, when the dollar has dropped versus the major currencies, as you can see here, from the early 70s up until, let's say, 1980, that led to a much higher gold price. And then when Paul Volcker let rates go almost up to 20%, we saw that gold topped and had a pretty long bear market, 20-year bear market up until 2001. Of course, the dollar started coming off in the mid 80s, but that didn't seem to impact gold. It kind of kept gold pretty much pegged around $400. And then in 1996, we had a big move in the dollar index from almost 80 to around 120 by 2001. And you can see that gold made its final move lower on that move higher in the dollar versus other fiat currencies down to 250. But ever since 2001, as you can see, gold is being moving higher, no matter really what the dollar index does. And 2008 was a very important year, I think, for my theory that the next move higher in gold will be explosive. And it also confirms my theory that for the long term, companies or individuals or governments that hold a lot of reserves in different fiat currencies. They're doing the wrong thing in the long term, in my opinion, because it's almost a losing game to hedge dollars with euros, or Aussie dollars with Canadian dollars, or Brazilian reais with some other fiat currency, because they're all sinking versus gold. And that's what 2008, well, the period since 2008 shows us, because as you can see here, the dollar made a new low in 2008, just above 70 as per the dollar index. And that was in March. And I remember that day very well. That was the day that JP Morgan had to take over a failing Bear Stearns. That was in March of 2008. And gold got up to 1,030. On this chart is just below 1,000 because it's a closing monthly basis. And the dollar got down to 70.69 or thereabouts, if I remember correctly. And the dollar now has risen, of course. It has done well versus other fiat currencies. We are at 92. But don't forget as well that back in 73, when the dollar index was kind of inaugurated, it started at 100. So the dollar is actually down since then. Of course, there was no euro, but the euro is just a derivative of the old legacy European currencies. So yes, the dollar is down since 1973, and gold, of course, since 1973 is up multiples, as you can see by the chart. So the trend is higher for gold, lower for fiat currencies. And I would say that the move higher in the dollar since 2008 hasn't been confirmed. There is no confirmation. So how do we do a confirmation study for the dollar index? Because the dollar is the only major reserve currency. Well, we look at it versus gold because that's how it's been looked at in the past. When the dollar is strong, gold is weak, and vice versa. But we haven't seen that this time because the dollar has been strong versus the other fiat currencies. But gold, instead of dropping maybe to 500 or 400, which would make sense because the dollar's gone from 70 to 92 and even above 100, and gold is still at 1800, despite the fact that when the dollar bottomed in 2008 at 70, gold was at 1,000. So you would think gold would be way below 1,000. And that's why I think people need to be patient. People who have been holding physical gold and silver for a long time, like me, you need patience because the next move higher is going to be even more explosive, because when the dollar starts keeling over, it's going to put gold and especially silver on steroids. And the other thing that this chart shows, because it's a monthly chart and it's also a closing basis only chart, just have a look at last year. Yes, we had a big drop in gold in March, but it doesn't even show on the chart. The consolidation we've had for over a year in gold and silver eventually are going to be a blip on this chart. And the dollar doesn't even have to drop that much. But as you can see by the long-term trend here, we've had lower highs and lower lows. So I've spoken about this before. I think the dollar index topped in January of 2017. And we're going to bottom again in the dollar index. But it's going to be probably around 2023, 2025. And that's because the cycles in the dollar index tend to last, the up cycles and the down cycles tend to last anywhere between 6 to 8 years, sometimes a little longer. So if you take 6 years from 2017, you get to 2023, and you add maybe 2 years, it could be 24. or 25. So again, though, yeah, if you're holding dollars and you think, well, the dollar is going to go down versus other fiat currencies, I'm going to buy Swiss francs or Singapore dollars. No, because it's not they're not going to perform as well as gold and silver in those currencies. So maybe corporations that need liquidity in fiat currencies, multinational corporations, will hold those fiat currencies for short-term operations. In the long term, though, as I've said many times, there's only one way to hedge the sinking fiat currencies, and that's through holding real money, physical gold and silver. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.